over the last 4 years? What were Americans, in your opinion, so upset about that they completely shifted to the red?
I think it's a revolt against the elites. That's what I think was going on.
Inflation has eased substantially from a peak of 7% to 2.1% as of September. We are committed to maintaining our economy's strength by supporting maximum employment and returning inflation to our 2% goal. Today, the FOMC decided to take another step in reducing the degree of policy restraint by lowering our policy interest rate by a quarter percentage point.
It's Thursday, November 7th. Trump just won the presidency, and the Federal Open Market Committee just today on the 7th cut the interest rate, the Fed funds rate, by 25 basis points. We'll be talking about what's next for not just monetary policy, but also fiscal policy now that Trump has won the White House. What's next for the economy? What's next for interest rates, inflation, and foreign policy? Trump has vowed to end wars. Will he succeed? Let's find out. Professor Steve Hanke joins us today. He is a professor of applied economics at Johns Hopkins University. Welcome back, Professor. Also, congratulations on your new book, Professor. It's called Capital, Interest, and Waiting, Controversies, Puzzles, and New Additions to Capital Theory. We won't talk about the book in detail today, maybe another time, but if people want to check out the book and learn more about capital and interest rates, link down below. Thank you very much for returning to the show. Welcome back.
Hey, great to be with you, David.
I'm going to start by playing for you this clip here from the FOMC press conference. This is the first question asked to Chair Powell by Colby Smith. Take a listen here.
Thank you. Given the expectation that the election outcome will produce policies that would meaningfully impact the U.S. economy next year, how is the committee taking these proposals into account for upcoming decisions, including potentially the next one in December? And can you give us any more sense of how proactive or reactive the Fed is prepared to be to changes in economic policies with the next administration?
Sure. So let me say that in the near term, the election will have no effects on our policy decisions. As you know, many things affect the economy, and anyone who writes down forecasts in their job will tell you that the economy is quite difficult to forecast looking out past the very near term. Here, we don't know what the timing and substance of any policy changes will be. We therefore don't know what the effects on the economy would be, specifically whether and to what extent those policies would matter for the achievement of our goal variables, maximum employment, and price stability. We don't guess, we don't speculate, and we don't assume.
Okay, I think she asked, that was the first question at the press conference. I think she asked what everybody wants to know is whether or not fiscal policies from the new administration will impact the Fed. So what is your response to his response to that question?
Well, let's step back and look at the Fed under Powell's chairmanship, and it's been a complete disaster. And it started, by the way, with the onset of COVID. We had a huge increase in the fiscal deficit in the United States, and the Fed wasn't passive. They were proactive. They monetized over 90% of that deficit. In other words, the deficit increased. To finance the deficit, the Treasury had to issue bonds and debt. And who bought the bonds? The Fed did. And when the Fed buys bonds, it credits what? The government. It creates money out of thin air. So the money supply exploded as a result of that. In February of 2021, the rate of growth year over year in the money supply, David, was at an all-time high. It never reached that level, about a little over 17% per year since the inception of the Fed in 1913. So we had the government fiscal policy expanded, and it was financed in short by the Fed. The Fed monetized it, and the money supply exploded. And what happened? Inflation exploded. And then to counter that explosion in inflation, the Fed now is throwing everything in reverse, and they're contracting the money supply. Since July of 2022, the money supply is actually lower than it was now. And the rate of growth in the money supply is very anemic. It's 2.4% per year on a year-over-year basis. And to hit the Fed's inflation target of 2%, Hanke's golden growth rate suggests that they should be growing the money supply measured by M2 at about 6% per year. So first, they expanded the fiscal situation, expanded the money supply because of the fiscal situation, which they didn't have to do. I mean, the Fed is supposedly an independent body making its own policies. No one told them to monetize the debt, but they did it anyway. And the money supply exploded. But remember, with Powell and the Fed, they don't watch the money supply. They claim that the money supply has virtually no connection to asset prices, economic activity, and inflation, which is utter rubbish, of course. So there we have it. We don't know what they're going to do, but what they did the last time under this hypothetical scenario, the scenario is, by the way, just so people get it straight, that Trump is going to increase the fiscal deficit. And he will do that by tax reductions mainly. And so the deficit will grow. And then the assumption is that if the deficit grows, inflation's going to grow. But that doesn't follow. If the deficit is not monetized by the Fed, the money supply, it doesn't change as a result of the increased fiscal deficit, and the inflation is not going to change.
Okay, so we'll go back to the Fed in just a minute, but I want to just understand fiscal policy for the next administration first before we can link that back to Fed monetary policy. So first of all, you were correct in calling for a Trump win. You've been saying that for weeks on my show.
Now, those are subjective. The polling markets are. Well, if you look objectively at what's going on in the betting markets where people have skin in the game, and you get an objective market indication of the probability of winning, Trump has come from behind to with considerable lead overall and in these swing states. So it appears that there's quite a bit of momentum behind Trump. So at this stage, that's what it's looking like. I tend to look at the betting markets, the so-called prediction markets, because they are objective and reliable and more accurate than the polling data. And the reason for that is, of course, people are betting real money when they're engaged in those markets.
You were citing betting markets having favored Trump, even though the polls, depending on which poll you're looking at, may have had Harris ahead. So good call there, Professor. People can watch our last interview right before the election for that. But anyway, Trump won. And now the question is how he's going to bring us into this golden age of America. That's what he said in his victory speech the night of the election.
I will not rest until we have delivered the strong, safe, and prosperous America that our children deserve and that you deserve. This will truly be the golden age of America. That's what we have to have.
We're going to enter a golden age. How's he going to do that?
Well, I think he's going to do essentially what he did in the first term he was in office, and with new twists and turns. I mean, now we've got this headline of big increases in tariffs, for example. That's kind of a headliner, but you have to look back at his view about fiscal conditions, because you asked about the fiscal side of things, and the fiscal side of things is that he didn't pay too much attention to that in his first term. In other words, controlling the fiscal deficit. Now, of course, Biden even paid less attention to it than Trump. So yeah. I don't know what they're getting all worked up about Trump and his fiscal laxity, but I would say if his first term was any idea, we get any idea of where he's going, he won't pay too much attention to it. He'll be lax, but probably not even as lax as Biden. I mean, Biden doesn't pay any attention to it. He's just spending. And the only difference really between Biden and Trump and the fiscal side is that Trump would be more leaning towards tax reductions, and that would be the source of expansion and fiscal deficit, whereas Biden has been more government spending, and that's been the big engine driving increases in the deficits. But both of them are not, they're not deficit hawks, by the way. Trump first term, or Biden, they paid essentially no attention to the deficits, and the Fed hasn't paid any attention to it too, in the sense that they haven't walked away from it. They've been buying the government paper and expanding the monetary system as a result of that, until inflation broke out. And then they reversed gears, and now you've got this, what they call quantitative tightening. They're actually trying to shrink the balance sheet of the Fed. And by doing that, you have very slow growth in the money supply, and inflation is down to 2.4%, and the target's 2. I think next year, with this monetary squeeze that continues, will be below 2% with inflation in 2025. We'll see inflation readings below 2% per year next year. That's what my thinking is, and that's kind of baked in the cake, because remember, inflation lags behind changes in the money supply. So if the money supply has been slowing down and contracting since early 2022, it's driving this downward movement in the inflation rate.
Trump said that if he were to win, he would appoint Elon at the helm of some sort of efficiency commission. It's not clear exactly how this commission will work, but the idea is to make the government leaner and more efficient, and perhaps cut some programs that aren't necessary. I think the goal here is to cut down the size of the government, or at least increase its efficiency, spend less. Can you comment on this first of all, and then whether or not Trump will be successful?
Yeah, there are two aspects to that. We had in the Reagan administration, we had the Grace Commission. Peter Grace had a presidential commission and an appointment to head this Grace Commission, which was looking after waste, fraud, and abuse in the government and shrinking it. In short, that was the objective. But the thing really, they had a wonderful report. I don't know how many volumes I contributed to the thing. And of course, it had no teeth. Nothing ever really happened. So
why not?
So that is that going to be what they do this time? We have an Elon Musk commission.
Sorry, what do you mean nothing? What do you mean nothing happened?
A multi-volume report.
Right.
And then they don't do anything. Now, if they did something, by the way, it'd be very good for economic growth, and also be very good to shrink the deficit. So on the assumption, the hypothetical, that they actually did cut back and cut waste, fraud, and abuse in the government, cut the government expenditures as a proportion of GDP, that would be a very pro-growth move, by the way, if they actually could execute and do it. Now, with Musk, that really is a possibility.
This is what Trump said earlier in the year. He said, "I will create a government efficiency commission tasked with conducting a complete financial and performance audit of the entire federal government." What would you do if you were in that position leading this commission? What would you cut? What would you make it more efficient? Yeah,
I would actually start cutting, and you don't need much to study what to cut. I mean, there's a lot of low-hanging fruit that you could cut. So remember that the total government spending could be slashed, in my view, by federal government spending anyway. You could easily cut it by a third without even thinking, almost. And you would have a lot of growth as a result of that. Cutting government spending is pro-growth, because most government spending it does involve a lot of waste, a lot of fraud, and a lot of abuse.
Current federal deficit stands at more than 6% of GDP. Do you think Trump could close this gap down to zero in the next 4 years?
No,
Well,
I don't think he's inclined to do that. I just don't. I don't think he's interested in that. If you gave him that proposition,
mhm.
he wouldn't be too excited about it, and given all of the policies that he's rolling out, and of course we know Biden wasn't. We know why we have 6% right now, and we have a president called Joe Biden. So Biden isn't, and politicians in Washington aren't very interested in this. And I think the only way to actually solve it, what I would do, is what I've mentioned before, and that is have a convention of states under Article 5 of the Constitution focusing on a constitutional change that would limit the growth rate in government expenditures to the growth rate in the real economy. So that means that the government could never crowd out the private sector. It couldn't grow any faster than the overall average of the growth rate in the U.S. economy. That's one part of the amendment, and the other part is that the budget should be balanced.
How did Clinton do it in the 90s?
Oh, Clinton did it in the 90s because he benefited tremendously out of the framework and foundation that had really been laid in the Reagan years, particularly the Reagan second term. So you had a lot of supply side economics, a lot of positive growth. That was on the supply side of the economy, and you had Greenspan as the chairman of the Fed, and he was keeping the money supply growing pretty close to Hanke's golden growth rate of about 6% per year. So you had monetary stability, and you had supply side economics coming in, and on top of that, you had a huge peace dividend. They were cutting defense expenditures. Remember, the Soviet Union had collapsed, and we were cutting defense. So we had a peace dividend. All of that, it was just a perfect storm for a great fiscal performance by the most conservative fiscalist we've had as president since World War II, and that was Bill Clinton. Remember, the last 2 terms of 2 years of Clinton, we actually had surpluses. We weren't talking about deficits. So we had good supply side economic foundation that had come in with Reagan, and the big benefit of that was being picked up by Clinton. We had the peace dividend with the fall of the Soviet Union and the communist empire. And that gave us a peace dividend because we were cutting defense expenditures. And then you had solid monetary policy with the money supply growing at a pretty even pace, around 5-6% per year. And in addition to that, you had divided government. Remember, we had the Republicans. Newt Gingrich, remember, was the Speaker of the House, and Clinton was the president. So that was kind of a standoff, and okay. you had two pretty clever guys. One on Capitol Hill was Newt Gingrich, and the other one was in the White House with Bill Clinton, and you ended up with fiscal control. But that was a kind of an anomaly. See all those things coming together that I mentioned. Yeah. Now the only way to solve this thing long term is to change the Constitution.
Okay, let's go back to the current administration. So we know, like you've explained to us many times, that inflation is a monetary phenomenon. However, people are concerned as to whether or not tariffs would be, the glitch in this equation. Meaning, even if the Fed does not increase the monetary supply, the money base, will we still have offshoots of higher inflation because tariffs will be introduced?
No. Inflation is always and everywhere a monetary phenomenon. The rest, you can forget it. You just watch the money supply, and you're going to get the picture. The big thing with tariffs, which I'm totally against, I'm against quotas, I'm against sanctions, I'm against. The tariffs, you have to think of it, it's like a sales tax. It would be like having a national sales tax, like a VAT, like they have in Europe. They have VAT taxes, value-added taxes. It would be like a national sales tax on everybody. it would be a very bad thing.
No,
I'm totally against it.
I understand that, but maybe explain to the people watching this right now why it would not mean higher prices. If I'm importing something from China and I slap a 20% tariff on it, well, whoever's selling that thing has to raise it by 20%.
Yeah, but that's confusing inflation, which is an aggregation. The inflation measures are an aggregate number. And like the CPI, you've got over 300 items in the CPI, the Consumer Price Index. That's an aggregate of many things, including some things that you're importing from China and other places. And if you put a tariff on those things, the price of those imports does go up. But those are relative price changes. Those prices are going to go up. Maybe some other prices are going to go down. And in fact, that would be the case if the money supply, if you didn't change the money supply. So yes, but don't get faked out by looking at the effect of a tariff on one particular item, because that item's price would go up, just like the item that has a sales tax increase on it. But that doesn't mean inflation is going to go up. That just means the price of that one item that's in the basket that makes up the consumer price index goes up.
Okay. Switching back to the Fed, we're going to jump around between the Fed and Trump today. I just want to get your reaction to this, Professor. Take a listen, please.
Hi, Victoria Guida with Politico. Some of the president-elect's advisors have suggested that you should resign. If he asked you to leave, would you go?
No.
Can you follow up on do you think that legally you're not required to leave?
No.
To follow up on Victoria's question, do you believe that the president has the power to fire or demote you, and has the Fed determined the legality of a president demoting at will any of the other governors with leadership positions?
Not permitted under the law.
Not what?
Not permitted under the law.
Thank you.
He seemed a bit annoyed at these questions, but okay. I'll let you respond to that.
They're a little bit. You see, this is just stand back. These are like all these hypotheticals we're getting into. What is Trump going to do? Well, no one knows what Trump's going to do. Maybe Trump doesn't even know what he's going to do. But these are hypotheticals, one after the other. The one thing that politically is actually interesting with the Fed, not the governors or the chairman, as Powell indicated, there's really not anything the president can do with that. But if you look at the staff of the Fed, there are 785, or roughly thereabouts, economists that work at the Fed and are part of formulating monetary policy. And the Democrats outnumber the Republicans massively in that 785. There are 48.5 Democrats for every Republican. It's almost a 50-to-1 ratio. So the staff over at the Fed, I mean, it's basically a Democratic staff, but that's true of all the civil service. All of the government, most of the government employees are Democrats. They're not Republicans. So think about that for a minute.
Okay, I think Powell is a registered Republican, but that aside,
I'm talking about just the economists on the staff. I'm not talking about Powell or the governors.
Sure.
And in fact, Powell was actually appointed by Trump. But
yeah. Okay. Well, there's been speculation, as you know, we've talked about this actually early in the year, that Trump wanted to be on the Fed. I don't know what that means. Okay, again, we're just speculating here. That's what he said, right? The independence of the Federal Reserve being challenged was actually brought up today at today's FOMC conference. Powell just said, I don't want to talk about it. Nothing political in today's conference. That's what he said. So I'll let you comment on it because Powell doesn't want to talk about it.
Well, the idea that that the Fed really is independent is kind of a fantasy. They're obviously influenced by all sorts of political factors, and whether these are kind of behind the scenes or in Reagan, I used to have regular lunches with Paul Volcker, for example, I don't know what went on. No one knows exactly what happened at those lunches, but so there are influences. The idea that the Fed is just floating in outer space and is disconnected with American politics is as I say, really a fantasy. Exactly what kind of influence and what kind of rhetoric Trump plans to use vis-a-vis the Fed, I don't know.
Okay. What do you think the Fed is going to do in regards to the debt? This was a question brought up by a reporter. I'll just take a listen to this and I'll get your comment, please.
Hi, it's Andrew Ackerman with the Washington Post. I just wanted to follow up on the discussion earlier on fiscal policy. Your predecessors, Greenspan and Volcker, spoke up loudly when they thought large budget deficits endangered economic or financial stability. Will you do that too? And right now we're in a period of full employment. We have large budget deficits and debt at historic highs that are and rising. Is that something you'd speak out against?
So, I have said many times, no more, no less than what the predecessors you mentioned have said. And what that is that the U.S. federal government's fiscal policy is on an unsustainable path. The level of our debt relative to the economy is not unsustainable. The path is unsustainable. And we see that in, you've got a very large deficit you're at full employment, and that's expected to continue. So it's important that that to be dealt with. It is ultimately a threat to the economy. Now, I can say that. I don't have oversight. We don't have oversight over fiscal policy. I've said it on many occasions, just said it again.
Unsustainable path, the level of debt, or the direction of the level of debt, rather. Okay, but he doesn't have control over that. So why are we discussing this? That's the question.
So, well, it's being brought up because there's a lot of conjecture that it'll get worse with the new administration than it is now, and if it's not sustainable now and going to get worse, obviously the thing will come to an end sooner rather than later. So the question is, how do you stop a runaway train, the deficit and debt, the mountain of debt? And there are only 4 ways to do this. One is that you can cut government spending. Now that would be the Elon Musk kind of thing. If Musk was appointed and had some commission to improve government efficiency, cut down government expenditures, waste, fraud, and abuse, that would cut the government expenditures. So that's one solution, and that would stop the runaway train. The other solution is to increase taxes, and Trump has already indicated he doesn't want to increase taxes. He actually wants the tax cuts that he put in extended. Mm-hmm. So that doesn't look very viable. So what's left? You've got three. Three is there's something called the inflation tax, and that of course bothers all central bankers, because if government spending is not cut, and if taxes aren't raised, where does that leave you? It leaves you with only one thing to do: monetize the debt and increase the inflation tax, and that's how you finance it. Now, the fourth way is my preferred approach, and that's what I indicated. You change the Constitution, and I'm on the board of something called the Federal Fiscal Sustainability Foundation, and that's what we're pushing for. A convention of states under Article 5, change the Constitution, put in a constitutional amendment like they did in Switzerland in 2001 that limits the rate of growth in the government expenditures to the rate of growth in the overall economy. So that right away, by definition, the government can't squeeze out the private sector. The relative share and size of the government stays the same over time. It doesn't grow. It doesn't push out the private sector.
Well, we know Trump is not going to raise taxes. He's going to do the opposite. So which of the other proposals that you've just
Okay,
outlined are likely.
okay. This the hypothetical is, or conjecture would be,
Mhm.
well, he wouldn't raise taxes, so that's he might reduce government expenditures, and
Mhm.
that's the Elon Musk card.
Mhm.
And whether he could do that and actually squeeze out the deficit's another issue. I said earlier, I didn't think they would be squeezing out government expenditures enough to reduce that deficit level down to zero.
Yes.
So as long as you have a deficit and you've got this unsustainable path, which with Powell, I agree with what he's saying there, that it's unsustainable. It puts a lot of pressure on the Fed because all the politicians want what? They want the Fed to buy the bonds that are being issued to fund the deficit. And that's exactly what happened with COVID, by the way. And the Fed did it. And of course, the Fed got in a lot of trouble because the money supply expanded tremendously when the Fed bought the bonds and created money out of thin air. That's how they bought the bond.
On the economy now, do you still think we're heading for a recession? The markets,
Yes.
well, the markets were pricing in, I mean, some sort of recovery. I don't know what, but the markets were very, they were euphoric on Trump's victory. Presumably, the markets think that things are good, things will get better. Otherwise, I don't know why they would go up. But I'll let you comment on that.
The market they aren't looking at the money supply either. The reason, by the way, there's a reason that I think the economy will slow down. And the reason is based on a model. And what's the model? The model is a quantity theory of money. And that's the most reliable way to predict the course of national income. And when I say national income, I mean nominal GDP, the real component plus the inflation component. That's the most reliable thing to look at. And what's been happening since early 2022, the money supply has been contracting. The stock of the money supply now is lower than it was in July of 2022. And when that happens, it's only happened, by the way, 4 times historically since the Fed was founded in 1913. And in every one of those cases, we had a recession, or in one of the cases of a contraction, 1929 to 1933. You know what happened then? We had a Great Depression. We had a huge contraction in the money supply, and we had a Great Depression. The other 3 episodes were more in line with what we've had now, just a contraction, a relatively mild contraction, and that always led in those other 3 cases to recessions. And so that's why I think we're in for a slowdown. But people don't look, they don't have a model. They don't have a way to think about national income determination, David. That's the problem. Everyone has become data dependent. What do you do? You look at your iPhone every hour to see what in the world's happening on Wall Street, what data are being released by the government, and basically have your finger in the wind and say, oh, the market's going to go up, the market's going to go down, the economy is going up, going down. And it changes every day, every hour, depending on the data that are coming through. But there's no coherent modeling of anything. You have no theory, basically, of what drives the economy. And the only thing that fuels the economy is money. And most people should understand this, by the way. It doesn't take a rocket scientist to figure out that if you increase the money supply a lot, what happens? First, asset prices go up. That happened in the pandemic. Real estate prices, land prices, stock prices, all those things went booming up, even though the economy was locked down and we had COVID and all kinds of other problems. And now, of course, by the way, back to the Fed, the Fed never predicted that we were going to have a boom in asset prices, that we were going to have more inflation, because they were never looking at the money supply, because they don't use the quantity theory of money. They deep sixed it.
I want to just step back and just take a look at what happened this election. So President Donald Trump won the electoral colleges. He won the popular vote. And now the Republicans have control of, where it looks like they're going to have control of, the Senate and the House. Okay. By the way, the last time that the Republicans won the popular vote was many years ago. But the point is, something went wrong over the last 4 years. What were Americans, in your opinion, so upset about that they completely shifted to the red?
Okay, I think as you indicated, I did predict that Trump would win the election, and that it would turn out more or less the way it did. Now, why? That doesn't take a rocket scientist to do that. I just looked at the market prices, and the market probability and prices in the prediction markets were all saying exactly what happened. So that's part of the problem. But the question is why? And why were they predicting he would win? And why did he win? I think it is basically a revolt of the population, not a revolution, but a revolt against the elites who run the show in Washington, D.C., and the elites in the media. The general population, they're fed up with the elites telling them what to do, running the show, spending huge amounts of money in Washington. And by the way, who became wealthy due to the mismanagement of the fiscal affairs and the monetary affairs in Washington, D.C. after the pandemic? The billionaires. If you look at the billionaires, their total wealth of the billionaires as a percent of GDP, I'm glad you're seated. You're going to be shocked with this number. It went from 14% of GDP, billionaires' wealth, in 2019, right before COVID, to just a little over 21%. So the billionaires made out like bandits. So I think the general population, they might not know the numbers that I just gave you, but their sense is rich people did very well, and we didn't do very well, or we even went backwards. If you look at the lower end of the income distribution, the income adjusted for inflation actually went down for many people. So that's what they're mad about. I think it's a revolt against the elites. That's what I think was going on.
You're absolutely right. Take a look at this screen here. Wealth of the top 1% and top 0.1% went up in nominal terms. Net wealth of the bottom 50% went up a little bit, but more or less it was flat over the last couple of years. The question is why? I mean, under Reaganomics,
this is very important now, what we're talking about, because I think this equity issue is really what drove the election. And what I'd say, the revolt against the elites, that's what I think was going on. Now, what caused this chart to move the way it did? First, you had a huge fiscal expansion, government expenditures going up under Biden. And that created a massive deficit. And the Treasury had to sell bonds to finance the deficit. And who bought over 90% of those bonds? The Fed did. And when the Fed buys those bonds, it creates credit, and it is money. And the money supply exploded. Now, when the money supply explodes, the lesson here is asset prices within 1 to 9 months go up. And if you look at real estate prices, home prices, land prices, the stock market, all those things roared up. Now, who owns those assets? Well, rich people do. Poor people don't. They don't own very much. They might not even own their own house. They probably don't even own a car. They're probably on hawk for the car that
Okay,
that they're driving.
correct
They
me
don't
if I'm.
and so
Yeah.
so that's the steps that were going on, and it's interesting. The limousine liberals in the Biden administration have been the biggest disaster for income inequality, I think, in the history of the country.
Right, but that's not just to play devil's advocate here. That's not the Biden administration's fault, is it? I mean, you just said it was a Fed
It is. It
that
starts
printed the
with a
money.
fiscal thing. It starts with a
Okay.
fiscal thing. Step one, huge government spending. All these two big spending programs,
Right.
all the income transfer, all that spending was increased massively with Biden, and the deficit arose. And conveniently, the Fed said, "Oh, we'll finance it all. We'll monetize it." And so you had this huge increase in inflation. And remember what I said earlier, it's an inflation tax. It was financed by an inflation tax. And who gets clobbered with the inflation tax? The little guy who has a weekly wage and getting a weekly check, he gets clobbered.
No, I get it, but
and who benefits? The billionaires.
Yeah. I thought, correct me if I'm wrong, but I thought that when the rich get richer, the poor should get richer as well. Why didn't that happen the last 4 years?
Because the poor don't own any assets to speak of.
Okay, so
they might, if you look at the balance sheet of the ones that are way down at the bottom,
Right.
they probably have negative numbers. They don't own, they own negative assets, not positive. And it's a billionaires. Why do you think that stock of money in 2019 that billionaires account for relative to GDP was 14%, and all of a sudden now it's a little over 21%?
I thought this was the core
massive.
tenet. Yeah. I thought this was the core tenet of Reaganomics, to make the rich richer and then it'll trickle down to the rest of the country.
No. You got the thing all wrong. It's the limit. Why do you call the progressives in Europe? They have this right. They're called the limousine liberals.
Okay.
The limousine liberals. You've had probably the most left-wing government. We certainly the most left-wing government we've had since World War II. It's unambiguous. Biden is way out on the left end of the spectrum and has done the most damage to the mantra of income equality of any president since World War II. So I would say the legacy of the Biden administration, Bidenomics, has been to create massive income inequality. And I think that is the reason that Trump won. I think it's a revolt of the masses against the elites.
Okay. What? I don't think that was the intent of the Biden administration, but anyway, it happened. Okay.
No.
How much of that?
They have no idea what they were doing. The limousine liberals their intent is to spend government money. That was their intent. That was their intent. Look at the Inflation Reduction Act, a huge expenditure. The CHIPS Act, a huge expenditure. Remember that was going to make the economy hum. That was going to allow us to go into the green transition. Remember that? Remember climate change? They haven't been talking about that lately. But that was going to be green. Biden was green. And he was going to help the little guy by forking out lots of money. Factory workers, American manufacturing, all of that. Remember what the intent is and what the reality is are two different things. You get a big mismatch between rhetoric and reality. The reality is all these government programs always lead to massive income inequality. That's one reason that I want the government shrunk. I'm for neutrality. I'm not for promoting income inequality. I'm not a limousine liberal.
Yes, and to decrease income inequality, we need to do what exactly in concrete terms?
Well, in concrete terms, you first step, reduce the size of the government and change the Constitution along the lines that I said, like the Swiss debt break. Balance the budget and don't allow government expenditures to increase any more rapidly than the overall rate of growth in GDP. That's one thing. The other thing is to keep the Fed from monetizing any deficits that might occur. Now, if you have the fiscal rule, that won't be a problem because there won't be any deficits.
Right. Okay. The liberal left like to tax the billionaires and redistribute that to the poor.
That's the theory of thing. That's the theory.
I understand why.
That's the rhetoric.
Explain,
what's the reality of the thing?
Let's explain to the people why that would not work, or maybe in theory it could work. I don't know. We'll let you explain.
I simply don't. Historically, if we look at the expansion of the one reason that inequality is become a bigger and bigger problem is government. If you shrink government, you shrink that. It's an inequality engine. The government is. And remember, it's the elites that are running the thing. And it is kind of a bipartisan thing, by the way. The limousine liberals are a lot of them are actually limousine conservatives.
I understand. I understand. Well, okay. So Professor, let's look ahead now. We have here quite possibly, like I said, a Republican full sweep with control of the House and the Senate. Trump is going to have an easier time passing new legislation. What do you think he's going to do first come January?
Well, I don't know about that. Let's talk about the sweep. For me to control government, by the way, the best thing is divided government, to have the White House in one controlled by one party and have the Senate and House controlled by another party. Remember that was, we talked about Clinton. That one of the beauties of Clinton, it was divided government throughout a lot of Clinton's two terms, where you had Newt Gingrich up on the Hill and Clinton in the White House. So you had Newt Gingrich, Republican, a clever guy, clever political maneuver, and so forth, and Clinton, a clever political guy in the White House. And that's one reason that a lot of these nutty programs, remember Hillary Clinton wanted some nationalized health program during Clinton's first term. Well, that didn't go anyplace because, of course, you had Newt Gingrich pushing the thing back. And Clinton was smart enough to realize that he was going to get clobbered if he tried to go forward with that. So very, very quickly, he adapted.
Yeah, okay.
So the one model for controlling government expenditures, and if you look at the thing, they're more controlled where you have divided government than where you have a unified.
Well,
where Capitol Hill is the same party as the White House, you have problems in controlling government.
That's not going to happen now. So what you're saying is there's a higher risk of uncontrolled spending?
Yes.
Okay. Well,
we don't know if it's spending, just uncontrolled government combining uncontrolled fiscal situation. Let's put it that way. Because the fiscal situation depends on two things. The government spending is the outflow and taxes are the inflow. So we could have, if Elon Musk, if they give him any authority to do anything, government spending might come down a tad and be controlled, but I don't think the government revenue is going to be increased too much.
Final questions on foreign policy. Trump said in his victory speech, he doesn't start wars. People said, he starts wars. He said he doesn't start wars. He ends wars. He wants to end the ongoing wars that America is indirectly and we're even perhaps directly involved with. What's he going to do first? How is he going to end the wars?
Okay, number one, the Middle Eastern war is controlled by the Israel lobby in the United States. So he'll have no control over that at all. So you can forget that one.
Well, he wants Netanyahu to end the Gaza war by January when he enters office. That's what he said.
Lots of luck. I mean, Netanyahu will run circles around him.
Okay.
Netanyahu's going to do what Netanyahu wants to do, and Trump won't have any influence over the thing at all. So
all right, what about Ukraine?
That's the end of that story. Now, going to Ukraine, he might, in fact, have some influence there. But the fact is, the Russians have already won that conflict. And whether the United States will go along with the conditions to establish a peace that the Russians want is another story, because the main condition is that Ukraine could not be a part of NATO. They would be a neutral country. That's one thing. The other thing is that the regions in Donbass that Russia has already conquered will go to Russia. So that's another factor. So you put that in your pipe and smoke it, because those are hardcore conditions of the Russians. The Russians will not stop until those conditions are met. So we'll see what Trump does with that. It'll be the Russians have won the war, so they're going to be calling the tune. Usually, what happens when somebody wins a war, the winner calls the tune. So you're throwing Trump into the thing. Well, what's that have to do with it? The winners run the show. The only thing that Trump will be involved with will be he has indicated that he's getting tired of funding NATO, and that he does want to stop the war and get a prize for doing that, and maybe he would go along with the conditions that the Russians will obviously throw up. But in the meantime, the Russians are clobbering the Ukrainians and NATO.
It was revealed that Zelensky, president of Ukraine, supposedly wanted Harris to win. That didn't, obviously Harris didn't win. I wonder if this will change.
You can see that even Biden has promised to continue to pump money into that war and finance it and until the new president arrives in the White House. He's pumping as much as he possibly can into that war right now. Biden is, which just fuels the war. It basically fuels the destruction of Ukraine. This is the way you have to think about it. The longer this thing goes on, the worse off Ukraine is going to be at the end of the day. So Biden is prolonging the war by putting more money in it and financing it and causing more destruction in Ukraine.
Interestingly,
I don't think that's the objective of Biden. But again, you have to look at reality. You ask about the limousine liberals. You say, well, their objective isn't to make billionaires richer than everybody else and the elites richer than everybody else and people who own a lot of assets richer than everybody else. That's not what the limousine liberals and the left say they want to do. But that's what they do. Now we're looking at Ukraine. And obviously the president isn't coming out with a speech. I'm going to send a few more billion to Ukraine so that it can be torn up and we have even more Ukrainian casualties in this war and that they lose more territory.
Yeah.
But that's the reality of what's happening.
Final question, Professor. People want to know about the security of the country. Wars. We didn't have any major wars when Trump was president last time. This is true. He claimed that. This is true. Okay. Although tensions did, escalate between China and the U.S., we didn't have any wars. So what would have to be done to ensure that no more wars happen again the next 4 years?
Well, what would be happening? You close the tap going into the Defense Department and the intelligence agencies and everybody meddling and fomenting war. It's financing wars. If there was some way to stop the financing, who's financing the main? The U.S. has given Israel over $18 billion to finance what? A war since October 7th. What about Ukraine? You think Ukraine would be fighting this war if the U.S. hadn't been financing it and providing logistics and all kinds of technical support. I mean, the idea that the U.S. isn't involved directly in the war in Ukraine is a joke. They're not only financing it, but they're providing a lot of direct military assistance.
Let's suppose Putin makes a deal with Trump. Let's just, again, we're conjecture here. So they end the war, they negotiate, they throw Ukraine under the bus. What does that signal to the rest of the American allies?
I think you don't have that right. They would save Ukraine from being further destroyed. But a peace agreement stops destruction.
True, but they would probably give up some land, maybe the Donbass to the Russians. Right?
Of course, I said the Russians
that's what I meant. Yeah,
are not going to walk away and territory that they've.
But does that signal weakness to the other American allies? Is the question that you've conceded to the Russians somewhat?
No, I think you have to go back to 2008, and I would say you have to have historical context. Who started the war? The U.S. and the West did by opening the door for Ukraine to become a member of NATO, which was a massive red line for the Russians, and Putin had made this very clear. So you don't start a discussion of talking in real time as of today. You have to look at the context of the thing. What was the first chapter, the second chapter, third chapter? What was going on here?
Good, very good. Thank you very much. Great update today for us, Professor. Where can we learn more from you?
You can follow me on Twitter at Steve_Hanke, or if you wish, send me an email to get on my distribution list. That's Hanke, Hanke, at jhu.edu. And if you really want to get into it, you can read a new book I just co-authored with Professor Leland Yeager, Capital Interest and Waiting, which you mentioned at the top of your show.
Yes.
Palgrave Macmillan just issued it. You can buy it. I just got a notice. Even Target's selling it. It's obviously you can get it on Amazon too, and I think it's at Walmart, et cetera, et cetera.
All right. Links down below. Thank you very much, Professor. We'll speak again soon. Take care for now.
Okay. Thanks, David.
Thank you for watching. Don't forget to like and subscribe and follow Professor Hanke in the links down below.